Welcome to Day Trading Challenge. I'm going to show you examples of how we use never loss trading top line and the newly developed SPOO move indicator, combine them for high probability trading using mechanical rules for entry, exit and stop. With this test, we want to filter out signal from noise. A signal is a price move that leads with a high probability to a directional move, and noise is just something where there is an indication but we don't want to forgo it. We use two different kind of indicators to make our decisions: the SPOO move signal and the power towers from never loss trading top line. We selected the most recent 2-week period, May 16 to May 27, 2022, and our signals will be SPOO move signals and power tower signals on a NLT top line chart. Will definitely not be 100%, so our minimum requirement is always 65% right. So let's see how the test came out. For our tests, we took a 12-hour period of the day, 4 a.m. East to 1600 or 4 p.m. East. And we'll apply certain conditions. Here we say, okay, we want to see the SPOO move signal at momentum change. To make the momentum change visible, we use the never loss trading double decker. It changes from red to blue, and that's only when that change happens when we want to take the trade. And the same for the power towers. And we want to look at box lines because they can limit the price expansion, so we don't want to trade against them. We want to trade in a kind of a free floating area. And we take no trade over 9:30, so meaning the signal is at 9:25 or 9:18. We're not going to take it because most likely then we will be going over the period of 9:30, which could be very volatile and trigger an opposite price move, so that's what we spare out. As always, there is a risk in trading. My name is Thomas Barman. I'm your presenter here today, and I'm here as a trader and educator, and I'm not giving trading advice like brokers, dealers, or financial advisors do. Let's get started with the test and document the results. What you see here is a never loss trading top line chart. It's reduced. There is more that you can put on the chart, but it contains the double decker, so that are the two lines, the red line and the green line. This is why it's called a double decker, but it shows momentum change. Like for example here, red momentum, blue momentum, and at that point of change with the signal, like here, that's when we want to trade. And the same here, momentum change from blue to red, and a signal, that's where we want to trade. On the chart you see a dot. The dot signifies where the target for the individual trade is. And also you would learn in the mentorship where to place the stop, but it's pretty obvious. And we have multiple ways to go through the signals, and there's always also what you see here, these box lines. And we want to trade in particular when we break out of these boxes, not against the boxes, because boxes can limit and hinder the price move. Let us go from left to right here, from the morning hours on, and look how the trades turned out here. So you had here the first SPOO move signal, buy above 4005. That was confirmed in the price move of the next candle. So this way you can use a sell stop and buy stop order, in this case a buy stop order. And then here the dot signifies where the exit would be. So here, signal, entry, buy stop, exit. All is defined right at the spot. We only trade if the price of the next candle is above 40.05. And that happened, and that got us into the trade to the upside. So next comes a signal here, but no momentum change. It is a red signal in a blue momentum, hands off. It worked, but nevertheless we wouldn't take that. We want to work with mechanical rules. But here again, this one, right comes the trade, momentum change, and that's here a top line signal. Sell 39.94. It happened. We came short on that opportunity and came to target. So we had a winner here, we had a winner here. So next comes a trade that goes to the upside. Blue momentum, so momentum change from red to blue, and signal and threshold is right above here. So we got ticked in and we got stopped. Bang. So that would be a bad trade. So then how do we go on? How do we proceed? you have another red signal, but on blue momentum. That's not what we want, not the right combination. Blue signal, blue momentum, upside trade. Here comes the next. Momentum change and signal. Here comes the next. Then you have here a signal, but in the wrong vicinity. So that's red momentum, blue signal, don't want to have it. Blue on blue, that's what I want to have, and going to the upside. Red signal on blue momentum, no trade. Blue on blue, trading to the upside. Now we have again momentum change, trading to the downside. And we get another signal, one of our strong never loss trading power towers, and that would let us even expand the target. So adding it up. In a 12-hour period, we had the following trades. Here. So first trade, winner. Second trade was here. Winner. Third trade, loser. Winner. Winner. No trade. Winner. No trade. Winner. Winner. So that's the balance of one day. In total on May 16 we had 8 signals. 7 from them were winners, 1 was a loss. And you see here I painted down the frequency because we have to tune at the right frequency on the never loss trading timeless charts. And so out of that period that we observe, most of the days were on a relatively high frequency, and then we tuned down a little. So what does it mean? You want to tune your chart to the right price increment to trade from, and that's important looking day by day that you are on the right tune, because else your signal is going to be disturbed. How do you get that? In the never loss trading day trading alert, we spell out the tune to put your chart at. Yeah, so every day, that's a trading day, we give you an input of what you tune your chart best on. It's not radically changing from day to day, but it changes over time. So this was May 16. Let us roll into May 17. Yeah, the next day, and we again take the period from the morning to the afternoon and highlight the individual trades. So you see here, okay, first trade occurred here. Very early morning hours, came to target. If we want to count it or not, that doesn't matter. Yeah, so that would not be a trade. Why? No momentum change. Yeah, it worked, but no momentum change, no trade. No momentum change, no trade. Yeah, this one would be a trade. However, there's the box line. The box line cuts the target short, and that's where you saw exactly where the price is bouncing the opposite direction. So we're not going to take that trade, even though 2 signals agree. That's the rules we trade on. And here comes the first trade. Morning 10:59 and lasted to about 11:40, yeah, to come to target. Yeah, so there's the first trade that came home that complied with all our rules. Signal, it worked, but again, not a trade we want to take because we didn't have the momentum change. No momentum change. There's another trade. Yeah. So that came to target. So when we just adding those up that were in a time period that was outside the time period, so we're not going to take it. This one was a winner. Yeah. This one was on a condition a winner. And then basically we'll have the day over and finish with 2 trades. 2 winners, no losers. After 2 days of solid opportunities, we're having a lot of more winners this far than losers, and that's positive, but we'll see if we continue on. And we always comply the same mechanical rules over and over. So you might ask yourself, what is the trade good for? So let me just frame it that way. So the high frequency trade is on about $550 price change, give or take, and the lower at $450 price change. So that's what you harvest when you get the trade right in that condition. On May 18, we had a very strong run in the very early morning hours. Let me go back here. So there you see it. So in the early morning hours here at 6:34, we had a signal, but it wasn't on our conditions because it already came out of the red. So therefore, we wouldn't have participated by what we're testing here in that trade to the downside. But then we get the momentum change a little later in the day, and that's right where it is here. So you had the signal 11:53. ticked in the continuation candle, so you have time at 12:07, the signal somewhere kicked in and got you in the trade, and then brought you to the downside, and then we were doubling up to that, and that's what also these double dots tell you. So you have the chance to make a 2 SPU advancements to the downside, and that was definitely here in that trade, giving you in that case about $1,100 of a price change that you can participate in per contract. Yeah, so how many good trades did we have, or bad trades? So this one was momentum change and it worked. Yeah, this one was definitely momentum change and it worked. Yeah, blue momentum to red momentum. There we are in the period. So again, day is over. We had 2 solid trades in the period of 11:53 to 1600. So 2 winning trades. This is what we add on. Continuing on with May 19, so very early morning hours, 1:33, confirmed in the 3 o'clock candle. We don't count that trade because we look 4 to 4. So that wasn't a trade which we count as a winner. So here, no momentum change, no momentum change. Yeah, that's red momentum. And that's the first trade then. 6:06, momentum change, SPU move signal to the upside, coming home. And we'll do that again right here to the downside. But what happens? Box line cuts the target short, so this is why we don't want to have that trade, because that's exactly, you see here at that box, price bounced and went to the upside, and then we'll try to see if we can latch on to the upside momentum. This is still the May 19 chart. I just rolled it forward to the second opportunity of the day. Yeah, so here that signal came home and also got doubled up with a top line signal on top of that, giving you the chance to make a 2 SPU advancements. Then next signal is this one here to the upside. Also this works, came right home, wouldn't take that. Why? Blue momentum, red signal, not going to work together. So then here, next signal coming home. Yeah, these ones we wouldn't have taken. And let me roll forward. So all in all, we had 4 signals, 4 winners this far, May 19. In that day, we had a period of ambiguity, so the price direction is not clear, and that's not where we want to accept any signals. There weren't any in them, but that's important here. The zone of ambiguity, when red and blue mixes, it's the purple zone. After the purple zone, when there is a good condition, a price move signal paints. That was the fact here, and it painted to the upside, came to target, and then again here to the downside, momentum change late in the day, and that came home. Altogether on May 19, we had 7 trading opportunities, 5 were winners, 2 were losers. Rolling the chart forward into May 20, so early morning trade, which we don't count, but it came to target. Yeah, same principle, but we don't count this one, and we'll roll forward again. Zone of ambiguity, came out of the zone of ambiguity. Price move was confirmed. We're not going to count that either because it was not right at the momentum change. Yeah, so therefore we'll leave that outside. There's more trading opportunities that you can take, but we want to be very mechanical in that approach. So that's the first one to take, 10:35, and it took about till 11 to come to target. Yeah, so that was the first trade. That was a winner. Again, momentum change here at noon, and that came to target. That then, in a continuation, is not a trade. Why? Box line cuts the target short, you don't want it, it turns around and gets into a momentum trade. So this day, you'll see immediately 3 trading opportunities in the morning hours. All 3 of them came to target, so 3 winners. So that's the finishing of the day of May 20. Yeah, so you had again here a winning trade. Yeah, see, obvious, it came to target here. Then there's a winning trade, it came to target. Then right out of the box, momentum change, and that's what we want to take. Yeah, so we have 3 winning trades here, and then the day was over. Let's add it up. May 20 was a solid trading day. 4 trading opportunities, 4 were winners. What we try to demonstrate here is to trade less frequent as a retail trader, but at key price turning points, rule-based, mechanical, clear entry, clear exit, clear stop. The opportunities of May 20 were solid between 10:35 in the morning and ended the day at about 15:36, 3:36 p.m. East. Let's jointly look at May 23, that was a Monday, and we'll go left to right again, looking at opportunities. Was that a trade? No. Blue momentum change, it worked, but anyhow we don't take that in that correlation. That worked too. We don't take it. Again, that was not at the momentum change, so no trade. This one made it, but was a losing trade. Yeah, we got stopped on the other way home, so this one was a winner. On the other side, that was not a trade. Yeah, so why? Because it had no momentum change here. This one was a losing trade, so that happens here. So we had two losers, one winners this far. This one came home and was a winning trade, and this one was a winning trade. So all in all, May 23, 3 winners, 2 losers. How are we doing this far? Yeah, so you saw May 16, 17, 18, 19, and 20. So the first week, then starting with May 23, we in total had 28 trading opportunities, and 23 this far were winners, 5 were losers. So we are above our 65% threshold at high probability trade setups. So we are here at May 24, and we go through the signals left to right again. Yeah, see what's happening here. So first signal, early morning hours, 6:22, didn't come to target. But what you do, the moment a purple zone opens up, you'll decide that that trade's gonna end, so that it has a little likelihood to go to its target. So the moment that purple zone opens, you'll close your trade somewhere over here. So you would have made a loss, so we count that as a losing trade. End of purple zone comes out, there is a signal, was no momentum change, so yeah, it worked. I don't count that at what we do here. This one wouldn't work. Red momentum, blue signal, no, we don't want it. Red momentum, blue signal, there is a winner. Yeah, so this one is easy, came to target, that came home. There is an easy one that came home, and this one wouldn't be a trade. So all in all, we had 3 trading opportunities, 2 were winners, 1 was a loser, and then we ended the day in ambiguity. May 25, and I put the entire day on the chart here between 4 and 4, and you saw here early morning signal, but no momentum change. That wouldn't be a trade. There is what we want to have around 8:30. Trade to the upside, that's what we're going to take. That worked too, but it wasn't to our conditions. So then trade to the downside, that worked. Yeah, came to target with the momentum change. Trade to the upside worked, came to target. 1, 2, 3 we have down already. Trade to the upside, came to target, but was not a trade because no momentum change, so therefore we spare it out. This is how far things can go. So 3 good trades. There is no momentum change. There is one. Yeah, momentum change to the upside. 1, 2, 3, 4 trades, 4 out of 4, and there was one late in the day which we don't count. 1, 2, 3, 4 winning trades that day. The next day, May 26, and we are looking at basically 2 opportunities. Yeah, so one came here at the momentum change, early morning hours. Yeah, and it came to target, and the next came right here, and it came to target. So you see those box lines. What you can do is you can enter your order that it enters outside of the box, because then you know that's not going to bounce back, and carry it through. And so the same you can do on here. What people also do with that system, yeah, so if you trade more than one contract, you let the second one trail, and for trailing you're using that red line, yeah, so you're going up with the red line and let it go as far as it can go. So you see here there's a counter, says candle number 5, so after a sequence of 2 times 5 candles, 10 candles in the same direction, it's time to close your trade. And that was here for a substantial amount of money, 40006 all the way up to 4060. If you participated in that one, you'll be very happy. And the same happens over here, but we count usually up to 5 candles, then it's time to go, or 2 of those spoofs that we trade for. So there's multiple ways of using the chart. I just show one very mechanical way that has not such frequent signals, but gives you very solid price turning points. May 27, when you did the right thing, a day from heaven, we came out of a purple zone where we don't want to trade, and right here at 8:34 the market committed to the upside. Yeah, came to that target, but if you trail what I just showed you with that red line, there was a lot in it and you were never infringed, because you know you trail with the line one candle backward and you'll go up until it ends. So that would have been a real substantial long way up from 40.78 all the way to 4170, so that's about 90 points if you did the right thing. So the system has a lot of other possibilities that I'm not showing here in that demonstration, but I want to show how to act at crucial price turning point. The reason for that is many retail traders trade too frequent, so it's important to wait for the right moment, invest when it matters, and capture those price moves to the up and to the downside. Counting it up, we had in total 38 trades in a period of 2 weeks. We had 84% winners, 32 out of 38. We had 6 losers. So that's very high probability and complies with what we commit ourselves to be at or above 65%. But here you saw less frequent trading at key price turning point makes a difference. If what we showed you here triggered your interest, we are happy to talk to you. Write us an email at contact@neverlosttrading.com, and a good time you are available that we can talk and demonstrate what our system can do. When you talk to us, we work out a summer special with you, because Never Lost Trading top line sells for 9,997. The spool move indicator for 3,997. That's a total value of the software of $13,994, and we'll make you a special offer because we tune it here towards day trading, but you will learn more in the hours that we are working together. So therefore we'll talk to you about a special offer which we do with Never Lost Trading Top Line Lite and the combination with the spool move indicator. 10 hours of training, 3 months of the alerts, all of this we go through with you, and we have mentorships tuned specially to your individual wants and needs. So we work at your best available hours, also weekends, and will train you for what you want to achieve. If you also, besides day trading, want to be a longer term investor, those charts work super duper special, in particular on weekly and daily happenings. We'll tune you in and help you to achieve the goals that you are striving for as a retail trader. We are looking forward to hearing back from you. Thank you very much for your attention, and good trading.